And so that's the problem, is that if the average entity does not know this is happening, therefore the banks are double dipping. They're actually getting paid twice in these situations. It's happening a lot. Now, that's just an example of how that's happening, right? And what's happening there. But it goes much further. It goes much further than that. But for this point right now, talking about all capital letters of your name, a lot of people do not really understand how it's applicable in their lives. Like, a lot of people just go, okay, well, I'm going to go and become sovereign. Well, when you become sovereign, in a sense, right, what that really means in a commerce world is that you're giving up your bond. You're giving up your bond. I'm sovereign. I'm not part of this anymore, and I'm giving up your bond. So it all builds on each other. It's all evolution, right? But the old way of looking at it, without taking into account all capital letters of your name, applies to a commerce world that we are interacting with every day, and it's very applicable. All this stuff, because our insurance policies, I'll give you a good example. When you go and take a claim for your insurance policies, they want you to believe that there's all these deductibles and monthly payments coming into this pool that we all put in, and there's these brilliant economists managing it, and that's how come there's always money for claims. That's not true. When you look at the paperwork carefully enough, you'll see that you're the chief executive officer of a company named your name in all capital letters on your claims. It's always in all capital letters. And when you sign off on that, what's happening is it's releasing money. And that's where the money's coming from. It's not coming from this managed pool. All that money's kept. But the truth of the matter, when you go through it and audit the transaction, you'll start seeing that, oh, wait a minute, the money came from my signature. And keep in mind, if it's a claim of, let's say, $2,000, well, in the paperwork, it's saying, well, we're going to take more than that for our fees. Sometimes they take $8,000 and they give you $2,000. And it's all because it's misrepresented to the general public, the transactions. All of them are. You believe that you're that name on the paperwork, but it's not. It's a separate entity, a legal fiction that they opened up and listed on the world market. That's different than being a human being in a transaction, right? You're actually a chief executive officer of the transaction.
This isn't just theory. This is fact, and people do something with it. Like, you have gotten people's debt to lessen or vanish.
Oh, absolutely. Yeah, we have real live cases now that it's reduced their debt by a whole lot.
What, and 10%, 50%, 70%?
In some cases, it would be 50%. The bigger the debt is, right? Usually you get a bigger, discount in a sense. But how are they getting this discount? Is by asking the bank for proof of ownership of the debt. That simple. Now, keep in mind, in the transactions we've done, there are lenders also involved that are asking for proof of ownership of the debt, because when a private lender sends money to a financial institution, that is an external transaction. When a bank sends money to a bank, that's an internal transaction, because they're all part of the central banking system. So that's an internal transaction. But when the public, a private lender, hands money over to a financial institution, we are expected to ask for proof of ownership of the debt, because it's an external transaction, right? Mm-hmm. And when we do that with contract law, because we now sign contract with the borrowers, right? So now that's contract law. We are now affected parties, and we, as private lenders, can go and ask the bank certain information, such as proof of ownership of the debt before we hand over the money. And if they try to just ignore us, it's called impeding commerce, which you're not allowed to do. So, but I mean, as UnitedWeStandPeople.com, the power's in the people. Let's keep that in mind. Like, the power's not in me. Only because I know all this stuff doesn't mean the power's in me. The power's in the people. And when we together go and implement what we're talking about today, there's huge ramifications, meaning great things that would happen, great benefits for all of us if we took this information and together applied it. Can you imagine if the banks had 200,000 people all asking through the courts for proof of ownership of their mortgages, right? I mean, that would be very interesting, because now there's strength in numbers and they can't just ignore that, right? And it's that simple.